Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook, and today is Fundamental Friday. So we're going to work through our Apple position. And so far, Apple has been a very good example of how to use options to enhance a stock portfolio. So we've been focusing on 100 shares of Apple that we bought prior to the earnings announcement in Apple, and we did a protective strategy. Not that we were necessarily bullish on Apple. We did it more as an example of how, or bearish, I should say, but how to use options to protect your portfolio around a known event. We then went and actually sold a call against the position to bring in income on that 100 shares of Apple. We then, after the earnings, decided, okay, we want to get long Apple and we don't have enough money to buy another 100 shares. So let's buy a deep in the money call as a surrogate for owning the stock. Well, that position has worked out pretty well. We have our call position on our short call position. And now that the stock has ran up and gone beyond the strike price. Now, we probably should adjusted that on last Friday's Fundamental Friday show, but we ran out of time. So on last Friday's show, we focused on, well, let's say you did have enough capital to buy another 100 shares. Instead of buying the call option, how might we do it? And we sold a cash secured put against Apple. Now, I want to emphasize that Tradier, you can do all of these strategies inside an IRA account as long as you have the approval to do so. You have to fill out an option trading application. And if they give you the correct approval level, everything that we're saying can be done inside a retirement account, let alone a normal trading account or a margin account. All right, but before we get too far along, I have to let you know that options do involve risk. And before trading options, you should read the characteristics and risks of standardized options. All right, my name's Brian Overby. We're focusing on Tradier.com, which is the paper trading website. And if you would like to trade along with me, you can go to Tradier.com and you can set up an account and you will get access to the paper trading. It looks exactly like Tradier.com does. It's a very simple, very straightforward platform for learning options. And if you'd like to learn more about that, please look at the description below the video. And with that said, we're gonna move out here just a second and we're gonna run over to the Tradier.com paper trading platform. And here we have it. This is our position on Apple. And we've done well on it. And that wasn't necessarily the goal, but Apple, I have been, Apple is one of the biggest holdings inside a Tradier by all the clients at Tradier, one of the biggest holdings. And it just goes right along with, all the stocks called the Meg 7. A lot of people own those stocks, and Apple is one of them. So we decided to use Apple as our example here, and we're going to keep playing with it. We're as long as Apple cooperates, and we can see opportunities to use options to help enhance our portfolio, our stock, or our 100 shares of Apple, we'll continue to do this. Now, if you have any questions, please do put them in the chat box. I'm happy to address them. This is the biggest thing that we're doing with Fundamental Fridays. We put together 4. If you sign up for a Tradier account, we'll send you the 4 basic videos that I did that covers the vernacular, all option pricing, everything that you need to know to get settled in to start trading options. And then to go along with it, we now have the positions on, and we're going to be trading. We're going to go to Apple, and when we're tired with Apple, we'll find something else, and we'll start trading options and eventually get to advanced option strategies using the paper trading platform at Tradier.com. Okay, here's Apple. Here's our 100 shares. Here's our option position that we have on. We have this little group feature over here. So I'm grouping, which allows me, and you notice when I highlighted it, it says create a group, allows me to single out these option contracts. So to start with, we bought a put. Well, stock went up after earnings. We didn't need to put. We sold it. We captured whatever premium we had left, but we still had a call position on. So we sold the 290 strike call. And if you see Apple right now, the price is at 300. So that means that this is going to be called away. And it's going to happen today after the close, May 15th. Like I said, last week is probably the ideal time to roll, but we can still salvage this position. If we don't want the stock called away, which would have been fine, right? We bought Apple at a much lower price, and it's now trading at 290. The stock has gone up, well, quite a bit actually since their earnings. I don't know how else to say it, I guess. But 290 is that call option. So I'm going to run over to the Apple chains, and the reason why I say that we probably should have rolled it last week is that the stock was closer to 290. And I have a section inside the option playbook that's called How We Roll. And in that section, we talk about if the stock gets to the strike, that's when you need to make the decision. If you get deep in the money on the call option, sometimes it doesn't even make sense to try to roll it because there isn't enough time premium in the option anymore to try to capture it. So you just let the stock get called away. And if you want to go back into the stock, you buy it 100 shares a little bit later. But that, if it gets so deep in the money, that's the plan. That's what we do. We still got some time in this one, in that it's a $300 stock. The stock is at 300, but we're going to have to go out further in time, and we're going to roll this call option up and out. So we're going to go up in strike. We're going to go from 290 to the 310, and we're going to go out in time. And because we didn't do it last week, we're going to have to go all the way out to the August contract. So here's the Apple chains, and I'm going to highlight the expiration that we're going to use. Okay, so we're sticking on the call option side of things, and these are the chains tab here on tradier.com. Scroll down. We got the calls over here. We got the puts over here. We have the buy sells on each side of it. We're going to go down to, here's our position that we have on right now. This is the 290 strike call, and it highlights very nicely for you that you are short one of these option contracts. It's an expensive option contract. It's trading at $10. And then I'm going to run out to the August contract, and it shows you right here that the August contract is 98 days away. So it's quite a bit of time that we're going to add to this position. I think Apple may struggle at these levels, or these big round numbers are a little hard to establish yourself, but there's a lot going on geopolitically, events going on in China. A lot of things can happen over the short term on this position. So 98 days to expiration, August 28th, we're going to click on that. Okay, so we know we need it to be more than $10 because the option contract is $10 in the money. And if we look at the 310 strike, we can actually get $13.20. That means we're going to buy to close the one that we own. We're going to go way out in time because we have to. And we're going to sell an option contract that is up higher in strike, giving Apple 10 more points to be able to move. And we're going to bring in a net credit on the bid here of $12.90, making the entire position a net credit in the account. Now, there is some risk on this. If you do this position and Apple goes down, well, you had a loss on your short call option, and it would have behooved you to let the stock get called away at 300, right? Because if the stock goes down and all of a sudden you turn around and it's trading at 280, well, then this was not the right move. But if the stock stays where it's at, or drifts higher, or even gets to the 310 level, then it was, because we captured an extra credit into the account. If it stopped short at, like, let's say 309, we captured not only the credit that we received when we initially put on the call option, we're going to also capture this credit here. And the net credit combined is going to benefit us overall. So if we do this, we still got to be very bullish on Apple. And I guess that's my point of bringing that up, is that we still got to be very bullish on Apple, because we are going to take a net loss on our short call, but Apple stock has more than outgained that loss that we got on that call. Okay. So let's do it. And here's the dashboard. I'm going to run to the dashboard, and I want to highlight one thing that I really like about web-based platforms like Tradier.com is that if you do want to see something, if you want to look at a separate section of Tradier.com, all you got to do is right click and hit open new tab. And you'll notice that across the board here, we have all the different tabs and all the different views for Tradier.com. I don't have to work in just one tab. You just right click and hit open in a new tab. And so here we actually see the trade. I already have it set up. And the trade is we're going to buy to close the 290 Apple strike call, and we're going to sell to open the 310 Apple strike call. And the difference here is that we're closing the one that's going to expire today, and we're going to open a new position that's going to expire on August 21st. And unfortunately, we got to go quite a bit out in time in order to do this. We're trying to get this done for a net credit at the midpoint, and it highlights it over here, of $1.85. Now, that's where I would work the trade. Apple's very liquid. I would think that you could get a midpoint fill. It's very feasible, but it's not guaranteed. Now, I'm going to move it down a little bit because I want to get it executed just to prove our point. So I'm going to go down to 160 inside the paper trading application. It's good for the day only. We could enter it good till cancel if we wanted to. GTC, that means that this trade would just sit in here until it actually executed, or you chose to cancel it. Most of them they'll sit in there for about 90 days, but this one won't matter because this option contract is expiring today. So we're just going to leave it as a daily trade. And we got the 160. And if we don't do this, our stock's going to get called away at 290, which isn't bad. We're okay with it, but that's going to be our position. We're doing really well on our deep in the money long call option too. So here's our trade. And let's submit this, and trade submitted successfully. All right. So with that said, we'll go back and we'll take a peek at it. But let's stop here for a message from Tradier about Tradier.com.
If you've been watching this show thinking, this all sounds interesting, but how do I actually start? That's where Tradier comes in. Tradier is a brokerage platform built for traders who want professional level tools without the complicated barrier to entry. As a beginner, what matters most is simplicity, reliability, and cost efficiency. Tradier gives you a clean trading interface, transparent pricing, access to stocks, ETFs, and options, and the flexibility to grow as your knowledge grows. What I like about Tradier for beginners is this. You can start small, you can learn, you can practice responsible position sizing, and you're not locked into something that won't scale with you. There's a link in the description below where you can explore Tradier and open an account when you're ready. Trade smarter, not harder. Use the right tools from day one.
All right. Well, thank you for that, Lex. Here we go. Here's our order that we have pending, and I just want to highlight it. It has not filled yet, but we're going to stick with the Apple positions. These are from Options Guide TV, which we do Monday and Tuesday, and we do more advanced trades. These are the two trades that we still have pending in the paper trading count there. And that access is actually, we entered those trades through Tradier Pro, which is the little bit higher end platform for the little bit more active option trader. But I do really like the simplicity of Tradier.com in that if I'm looking at this order, I can collapse it. I can see that this is our Apple spread, and it is called a spread. It's a two-legged spread, but ideally the way that I would announce it, I guess, is that we're rolling a call position. We are short this call. So this is a short May 15th, 2026, 290 call. We have to buy to close that because we've sold it to open. Now we got to buy to close. And then once that if we can execute that at the same time, we want to sell to open the 310 call going out to August. It looks like we filled. We got 160 in the paper trading account. So boom, it says we are filled on that trade. I'm going to bring this down here. I do think that if you were in your normal brokerage account a midpoint is where I would have started, which is a net credit of 180 to the account. And when you do that, you adjust it. You adjust it by a nickel or a dime, but we never do market orders on spreads. It's just a golden rule of beginning option trading is don't trade at market. Automatically, I put a limit in, even if you want to get a fill like I did here. I said, I don't quite want to, I'm in the paper trading application, so I want to make sure that it fills today, or else I'm going to get exercise, or somebody's going to exercise and I'd be assigned and have to sell my stock at that 290 level. And I didn't want that to happen. So we rolled out this position. And because of that, I moved it down to 160. I almost hit the bid, wherever the bid was on this spread. But here's the benefit of entering it as a spread. If I enter this trade as a spread, there it goes. If I enter this trade as a spread, the credit has to line up. If the call becomes a little bit more expensive to buy, we have to receive a little bit more on our sell to open. So we're doing the math, right, to make sure that you get that net credit. And that way it helps the risk of the market. Because if you just bought the 290 to close and then went around and the market went away from you and you tried to sell, it'd be really hard to make sure that you got that net credit that you wanted. Now, sometimes it could be a benefit to you, but when I'm rolling options, I always suggest doing it as a spread, like the example that we showed here. All right, well, that's going to be it for Options Guy TV Fundamental Fridays. Please share this with friends. You know, anybody that wants to get into option trading, all of these archives are available in hub.tradier.com. Look below if you'd like to open up an account and paper trade right along with me. Just go to the description, click on the link. It doesn't cost you anything to open up the account, and you can have access to me or anybody, or you can have access to ask any questions that you might have at any point in time during the Fundamental Friday show. So thanks for tuning in. We'll see you Monday for a full-blown edition of Options Guide TV, 11 a.m. Eastern Time, inside the hub, hub.tradier.com. Thanks for tuning in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.